So we have a massive fiasco that's been going on right now. Banks are collapsing. The stock market is obviously not doing very well. Oh, it's been not doing very, very well, but continuing on to this particular date. And the economy is obviously facing a lot of problems with things like interest rate, inflation, and it really just goes on and on and on. So, hey everyone, how's it going today? And welcome to another episode. So in today's video, what I really want to talk about is really everything related to the bank collapse and really starting to explain and maybe give a simple, easy explanation to what's been going on in that world, why it's particularly happening, and what we should do as just regular individuals or at least certainly most of us, regular common individuals going forward from here. So let's just get this video started right away because again, this is right now currently really only impacting large organizations, but there's a lot of fear that it might start to impact the individuals relatively in the near future. But of course, we're going to talk all about that. So as always, we're going to get started, but you guys know the same exact drill. If you guys enjoy videos, in order to share support, consider smashing the like button, consider subscribing, hitting the bell, or you can watch at the end to decide. And as always, feel free to leave a comment or any questions, thoughts about honestly just really anything, or even just to say hello. It is really always great to hear from you guys. So with that being said, let's get this video started and rolling. So in order to really start by understanding the situation and what's going on is that it's really, really important to really understand the story to what's going on with Silicon Valley Bank, which is the first really massive bank to collapse, and then also how our banking system just works in general as a very, very big picture. So with Silicon Valley Bank, because they're obviously the most famous bank, you know, right next to Credit Suisse, which is another bank which we might or might not talk about, but because they're very relatively related, is that Silicon Valley Bank essentially was a bank that was one of the first ones to really collapse. And the story to what happened there is that it's a bank that essentially is supposed to be the most popular bank for tech startups to invest their money. Now keep in mind is that when you invest or put money into a bank, most banks are really only insured for about $250,000 or $250,000 for us. Most of us, that's actually pretty good because most people do not have over $250,000 inside of our bank account, or certainly not inside one of our bank accounts. However, for a lot of the investors or the companies or the startups in this specific situation that have their money in Silicon Valley Bank, they actually have millions and millions, if not tens of millions of dollars, which makes it so that they're actually not fully FDIC insured for all of that money. So that's the story with the Silicon Valley Bank situation. Now, it's also really, really important to understand how our banking system works in general. So when it comes to how our banking situation, how the just banks work in general, is that banks run off of basically interest rates and borrowed money. When customers essentially have their money, they take their money and they start to deposit it into the bank accounts, and then inside of every single bank, they make money from lending out their money, which again is received from customers that give them that money. So essentially what it is that in simple terms is that when you deposit money, they lend that money out to others and then they make money off of the interest rates that they borrow. And then they also give you a little bit of that interest money as well in order to thank you for trusting them with your money. But again, you are only protected up to about $250,000. But these customers in this specific situation are the tech startups that have millions and millions of dollars. The true situation and the problem really comes is in an economically difficult situations, banks actually receive less money. As customers in this situation, again, the customers are the tech startups, start to make less money as well. So if your customers are making less money, the banks are also receiving less money in return as well. And so what this means is in order to try to generate a profit, they have to now turn to investing in bonds in order to make money. So in other words, what this really means is that for a lot of these banks, they are now turning to the bond market in order to make money. They are now essentially betting for us, you know, for many of us, we tend to sometimes bank on the stock market in order to make money, which is something I do not recommend because again, you know, these economic times shows you why the stock market is not easy money in any way, shape, or form. But with the banks, they're basically banking in the bond market, which right now, as we know, just stocks, bonds, investments, and just many things in that world are not doing very, very well in particular. And so the problem really becomes that when they've tied their net worth to bonds, if the bond market is not doing so well, it also means that the net worth of the banks are also not doing so well, because it means that the banks are also losing a lot of money as well. Eventually, what ends up happening is that the interest rates also start to skyrocket as we are facing a lot of record high inflation. And because, again, keep in mind, a lot of the money that we're working with is also borrowed money, it means that a lot of these banks and companies are now falling into even greater debt, because again, they were operating on debt to begin with, and now with interest rates skyrocketing, now it becomes even worse. And to make matters even more worse is that when there's a lot of fear inside of the system, what starts to happen is that instead of starting to deposit money from the customers, again, the customers being the tech startups, now instead the customers / tech startups are now actually trying to withdraw their money as fast as they possibly can and try to run away from before they lose their money inside. So what this basically means is that now they're losing money on almost every possible angle you can really think of. When it comes to the banks, they're losing money because first off is that they've tied their money to bonds, and bonds are not doing very well. Interest rates are skyrocketing, which means that they're also not doing well because they're in even greater debt, as even more so than ever before. And on top of that, people are now withdrawing their money, so now banks are not getting the usual amount of money incoming in. In fact, if anything, they're actually seeing their money start to exit out of their pockets because of that reason. So from everything going on between interest rates, the bond market, people, customer deposits, the banks, that is the story to what's been leading now to all of the stuff related to why banks are collapsing. And hopefully this gives you the whole big picture behind it. It's very complex, I know, so hopefully, feel free to rewatch it or, rewind back and forth if you need to, hopefully get some clarification. But I hope this maybe paints a picture to why banks are now currently collapsing and everything that's basically been going on in that particular world. Now, in terms of what does this exactly mean for us, is that the really great news is that while this is currently happening to banks, it's really only specifically happening to banks that operate or really are catered to large organizations, not the common banks that we typically would probably bank with, such as like Chase, Capital One, I know at least in New York City, I know, around, but the popular banks that most of us know, like, again, Chase, Bank of America, most of those banks, they're actually operating with a lot more money and a lot more assets than what we actually are working with in the specific examples or the specific banks that are now currently collapsing. So the good news is that I think for the majority of us, we don't necessarily have to worry about having our banks collapse. But with that being said, it is probably really important, not necessarily for this reason, but just in general to maybe just try to diversify where you put your money in general, just anyway, in case something happens. I do know is that the really just, I guess, general news is that most of us probably don't have $250,000 anyway. So the bad news to that is that we don't have $250,000. The good news to that is that it means that we are protected, because we would only have been protected up to $250,000 to begin with anyway. So that's the reason why I think most of us shouldn't really have anything to particularly fear in this situation, at least in the world of bank collapse. We might have a lot of things to fear in other areas of the economy right now, and I think that's really important to communicate. Right now we are going through a lot of other issues that I think are even more important than the banking collapse situation. For example, inflation is still skyrocketing very highly. The stock market is not doing very well. The housing market is still okay, but doesn't have very good positive foresight. So I think the big idea is that while the bank collapse is definitely a situation to really know and understand, and hopefully this video gives you a highlight about what's been going on there, I think that there are even greater problems that we should really turn our focus to that are even more important than what's going on with banks right now. However, with that being said, it might not be a bad idea if you currently have all of your money tied into one bank account to maybe try to diversify it into different bank accounts, really just out of protection and safety. It should already be pretty safe, but it's just more of just a mental sense of security that I think could maybe help out a lot of people if you are someone that's relatively worried about everything that's happening right now. But I think most of us should be at least should hopefully feel relatively safe with the money that we currently have inside of our bank. But of course, what we decide to do with our money, that's up to our own individual decisions. But I hope this video just kind of highlights several options that we really have. So with that being said, that's pretty much what I really just wanted to cover in today's video. So if you guys found that relatively insightful, as always, thank you guys so much for watching. Remember to smash the like button, consider subscribing, hitting the bell for more. Feel free to leave any questions, comments about honestly just really anything at all. So with that being said, thank you guys so much for watching. As always, stay safe, stay well, try to stay employed, stay protected, and hope to see you guys next time. Thank you guys so much again.